Good afternoon, everyone. My name is Jonathan Levin. I'm a columnist with Bloomberg Opinion. I'm here with Kathryn Anne Edwards. She's a labor economist, independent policy consultant, and co-host of the Optimist Economy podcast. Also here, my colleague Allison Schrager. She's a columnist for Bloomberg Opinion, senior fellow at the Manhattan Institute, and author of An Economist Walks into a Brothel and Other Unexpected Places to Understand Risk. We are here today to take in the Fed decision, which drops at 2 p.m. Eastern Standard Time. The expectation here is that we are going to see a hold. We have sort of opposing forces pulling policymakers in two directions at the same time. The labor market still a bit shaky out there, but of course the inflation data that we've been getting, the Fed's preferred inflation tool, core PCE coming in at 2.8% in the most recent reading. So it's still a good ways from that 2% target. So again, we're being pulled in a few directions. We'll be closely watching dissents, even though there's a broad expectation that the committee as a whole is going to land on hold. We are looking to see what Stephen Myron does. We are looking very, very closely to see what Christopher Waller does. Waller, of course, is one of those top 4 candidates for Fed chair in this very reality TV-like Fed chair sweepstakes that we're all watching. And another name to watch is going to be Michelle Bowman. Also possible that we could see a dissent there. So Kathryn Anne Edwards, what do you think matters in this decision here, where the headline could seem not so newsy, but there might be some other stuff going on under the hood? What are you watching?
I'm watching to see what's telegraphed from the press conference. I think not to make our own next half hour less interesting, but I'm very curious as to the types of questions that Powell will get and how he will answer them. This is a pretty incredible moment for the Fed and Fed independence. At the same time, it is a rather unique moment in the economy. We're slowly slowing down, and it is a balancing act of both what the economy needs from the Fed and how the Fed maintains its position to steer the economy.
Okay. Allison, what about you? What are you looking for here?
Well, again, I mean, I think, as you said, I'm interested in the dissents, which direction they are, how large they are. And again, I'm always interested more in the survey of economic projections, because that, especially because we have a Fed that's still so committed to forward guidance, I think that can tell us a lot about where they think the economy is going. And, where they think the outlook for inflation is. Do they think they've done their job with inflation and that's why they're cutting or sort of staying the same? Or do they think that they have more work to do?
Yeah, I wish we were getting a SEP today. I would love to see the update of those data points. Kathryn Anne, so you said, you're looking closely at the messaging from the chair. Do you think that we may see a change in messaging in that statement that the committee puts out here at the outset with the initial decision?
Well, we've had some interesting data released since the last meeting, including updated census projections of net migration that's showing, job growth has been relatively weak over the past year, but updated migration estimates are further support for the idea that the number of jobs that the U.S. needs to post every month is a lot lower than we're accustomed to. Yeah. And that changes the calculus of just, the economy's ability to produce new jobs is a function of the number of people it needs to produce them for. If it turns out that both of those numbers are lower than we thought, it puts the idea of weak job growth into perspective of actually it was just adequate. And I do wonder if there's going to be any mention of that.
Yeah, fair enough. And just as a reminder to folks, this is the first time we're seeing Chair Powell at the podium this afternoon at 2:30, following this conflict with the White House really boiling over in recent months, with the Justice Department sort of directly being weaponized against this Fed. So the decision comes out as expected. The Fed holds at 3.5 to 3.75 percent. Let me get you some more of the headlines as they hit. So while I'm waiting for some of this stuff to populate, just to give you a quick idea, we do see the yield on the 2-year Treasury note drifting down a little bit. We were trading about 3.58, 3.9%. We do drop down about 1 basis point. We end up getting 2 dissents today. Let me pull this up here. So the Fed votes 10-2 to hold benchmark rate at 3.5 to 3.75%. I said that the Fed sees the unemployment rate has shown some signs of stabilization. Okay, so that's a little bit of a hint of how this committee is seeing the development of the economy. And the Fed says, now this is the important one as far as I'm concerned, the Fed says Governors Waller and Myron dissent in favor of a 25 basis point cut. So again, this is important here because I think, number one, sadly, there is some politics, I think, in this process of choosing the next Fed chair. And we're going to get into the nitty gritty of why we see Governor Waller dissenting here. Of course, we don't want to put words in his mouth at this point, but we know that President Trump really wants to put a cutter in this job. And the fact that Governor Waller is out there identifying himself as a cutter, somebody who's willing to go against consensus for the sake of easier policy, I think one thing that it tells us is he's still in the mix. I think this is going to get the White House's attention. So let me come back to both of you. Allison, do these dissents, first of all, do these dissents make economic sense to you, or do you think they are political?
What is it, 25 or 50 basis points?
25 bips from Doctors Myron and Waller.
It isn't what I would do, but I think it's defendable. I mean, you could argue as Kathryn Anne just did, that the economy is weakening, right, and that you want to get ahead of that, anyway, the labor force is shrinking. That could mean lower GDP. So, I mean, I tend to be more hawkish in my orientation, so it wouldn't be what I personally would do, but I think you could defend it. Stephen, likes rate cuts. I'm not sure, if Waller would have done this if he wasn't up for Fed chair, although I think to suggest this time is unusual might be a bit of a stretch. I mean, one reason people speculate Jay Powell held off on raising rates, anyway, inflation had really taken off, was that he was hoping that Biden would reappoint him. And, that was arguably just as political. And that was a much more clear-cut situation, that they really had to increase rates because inflation had really taken off in ways that hadn't in years. And that was there was no doubt about that. So even if he did make a political decision, again, I would like the Fed to be independent and not make other decisions. It might not be so crazy or so out of bounds compared to what we've seen in the past either.
Yeah. You do want to give somebody the benefit of the doubt. People watching here know that Waller is my favorite pick for this job, and one of the reasons that I think Waller would make such a great Fed chair is because he's a high integrity policymaker who has shown that he believes in Fed independence and makes decisions based on the data. However, I'm going to do devil's advocate here. The reality is, when he came out and he did his July dissent, he said that we should be moving towards neutral, which at the time and still today, the median policymaker thought was 3%. And he identified, I think, 3 issues. He identified the fact that if you took tariff effects out of the picture, he thought that inflation was relatively close to target. I think that that's still reasonably true. He identified that there were downside risks to the labor market, which I think is still reasonably true. But he also identified that GDP was soft in the first half, averaged out over the first half, and he thought it was going to remain soft in the second half. I don't think that that's true anymore. I mean, third quarter GDP was kind of a blowout. We've already done a substantial amount of easing. I'm a little bit confused as to why this is the hill that he wants to die on here. But Kathryn Anne, come to somebody's defense here. Maybe it's Allison's, maybe it's mine. What's the point of dissenting, both in the abstract and at this precise moment? Like, why do we do it? Is it grandstanding? I mean, what's the point? It doesn't change the outcome.
That's a fair question. Like, if you are in the minority, does it matter? Maybe it's just to telegraph to Americans that there is some discussion that goes on, and that, this is a very hard job. It has an intense amount of pressure, even in a low stakes economy. But to, be in kind of the historic place that we're in now with, pretty, I would say, interesting is the word that could come to mind when thinking about economic policy pursued by the administration, that there is a lot to juggle. And maybe it's just to say, just because we made a decision doesn't mean that we are uniform about it. And the labor market over the past year and a half has been, I kind of compare it to like cars slowing down in front of a red light. You can see people tap the brakes and the red lights come on and then they coast further. And you've been getting those types of signals from the labor market. Hiring is certainly slowing down. The unemployment rate has certainly been climbing, but not to the degree or the speed that would indicate we're on the brink of recession. But that doesn't mean that the labor market is a slam dunk by any means. And weak job growth with pretty extended spells of unemployment for people who are looking for a job, that's not nothing. And I think that there is an argument to be made that it's reassuring to know that if you perceive the dissent as a way to say, we're going to do this, we're going to hold steady, but we understand that there's an argument for cutting, and we're not, we don't have wax in our ears ignoring it, might just be a way to reaffirm that the dual mandate does matter, and that these types of dissents are essentially saying, we know that there's a dual mandate and it can be in conflict, and we care about both sides of it. At the same time, I don't know how many people outside of like people in finance closely watching would actually pay enough attention to the dissents. And the number of Americans who would actually be hit hard by a bad economy are not paying attention to who is dissenting for the board. So this is really something we're doing for the financial sector at the end of the day.
Yeah. I want to bring in like a little more context here, because so Waller was an early dissenter, and he kind of had his finger on the pulse, because he dissented in July in favor. He dissented dovishly in July, and then the Fed went on to do 3 cuts, right? So directionally, he did seem to have a feel for the economy, and he also has shown that he has some respect for healthy debate. I want to just give you a quote, and this is from Bloomberg Surveillance back in July, when we were suspecting that Waller was going to become a dissenter, and our excellent journalists on Bloomberg Television were asking him about what he might do. And Waller said, "This is healthy," meaning this lively discussion. "I think this is what you want to see in a democracy. You want to see policymakers have serious, open discussions about where policy should go. It doesn't mean anything about politics or anything else. Make the economic argument and then see if you can convince others to go along with you. And that's all I'm trying to do." So that was a quote from July, but I would suspect that you might see something similar from Dr. Waller in his defense of his dissent hereafter. I do want to ask about this question of the neutral rate. Things always get a little wonky on this stream when we talk about where is the neutral rate, the rate that is neither sort of seen as restrictive nor is it giving a boost to the economy. It's a very abstract idea, but it does seem to be very, very important here. When Waller sort of laid out his thesis for why the Fed should move to cut, it was because he wanted to get to neutral. We're now in a range where we're plausibly at neutral. Some people think I've heard an argument along these lines from you, Allison, and of course GDP is kicking here. So, like, why should we believe that we're restrictive at this moment? What do you think, Allison? Could you weigh back in on that?
Well, I would think that we are near neutral. I mean, we just had a great GDP number, productivity's up. But if you look again at the summary of economic projections, when they put them out, they seem to think that the neutral rate hasn't changed very much from, let's say, 2019.
Yeah, I think they're at like 3%, the median.
Yeah, like you see these complete contradictions. So, I mean, I would argue that we have just permanently entered a more uncertain inflation environment. I mean, everyone seems to forget that inflation is still pretty well above target, and yet we're already declaring victory. Okay, I mean, I could be convinced this is a reasonable rate of inflation to live at, but if that's the case, then your nominal neutral rate is going to be higher. And as I said, we have uncertainty. We have certainly potentially less enthusiasm about holding U.S. bonds. All of this, again, is going to bid up sort of where neutral fixed income rates are. So if that's the case, yeah, we might be at neutral. But if that's the case, then the Fed also has to accept that. And so I always feel like they're trying to have the best of all worlds here. They're like, yeah, we're going back to like a zero rate environment. But yeah, we're already going to behave as if we're already like, you know, in a place where inflation's kicked, and you just can't have it both ways. Either you're really committed to getting inflation back down to 2% and have the neutral rate associated with that, or you're not.
Well, I just want to pause real quick and say, send in your questions. We're happy to address them on air right here, right now. Send those in. Kathryn Anne, to put this neutrality question another way, though, like, it just seems that this economy is full of contradictions. It's creating a lot of cognitive dissonance for me. And the Fed has this blunt tool. GDP is doing great, admittedly, but the housing market is suffering. The labor market, the Fed's policymakers seem to think the labor market is stabilizing, but it's not phenomenal out there. It's hard for a lot of people entering the labor market. So how does the Fed, with its blunt tool, deal with these complicated distributional questions?
Yeah, I mean, it's a really fascinating notion. I was thinking while Allison was talking that these releases are so frustrating because they like tell us stuff, but they don't tell us a lot. And we get like a dot plot 4 times a year. We get, maybe a dissent that we then have to interpret. But I feel like I have this kind of bigger desire to just truly get down into these really big picture questions. I mean, we kind of justify our positioning, with inflation being normal now and a different neutral rate because GDP is growing. But if you think about where the next 20 years will lead us, I mean, GDP is very contingent on population and workforce growth. If we are really entering a decelerated population era where we're flat to falling in any given year, GDP will contract, essentially for almost like a mechanical contraction, given the size of the workforce, less so that there are problems in the economy. So where do we come up with gauges of the neutral rate in that case? This almost feels like, especially with the migration numbers that just came out, almost a test case of how do you gauge the strength of the economy if if you have these classic signals that are not telling you what you are perceiving on the ground. And it's something that I wish we could have a more transparent Fed in the sense they could tell us where they're thinking on these long-term issues, because I feel like what makes today so interesting is how much it could be relevant in the future, really for like all the wrong reasons of like, yeah, remember when unemployment rate broke from the basic labor market activity, or remember when GDP kind of stopped telling us, you know, what we needed to know. I like there's enough economic data out there to make a case for weak or strong in uncertain times. I guess I would just love to know from the Fed, you know, what is their plan going forward for gauging economic strength if it turns out we do need to juice the economy more, the rates do need to go down. Maybe we missed something, and the unemployment rate was still below 4.5%.
So I would think that what you just said would point to a higher neutral rate, just because one, you have less labor, marginal product to capital is going to go up. And also, you know, you just also have fewer people paying for more older people, which could also potentially mean more debt. So I think, again, the Fed's in somewhat denial, thinking that the neutral rate's going to go back to zero. I think the evidence shows that, you know, you kind of end up with these like periods that can last up to a decade where interest rates sort of get really low or very high, but they do ultimately mean revert. So, you know, I guess we'll see. I mean, again, we also might end up, hopefully, I think the whole market is counting on a productivity boom, which should also increase marginal product of capital, which would also potentially lead to a higher neutral rate, but also higher GDP growth. Whether or not I'm pessimistic like you are, that productivity growth is going to be enough to compensate for a shrinking labor force. But, you know, I guess we'll see. It's a huge unknown. And I think it's very sort of hard to figure out. And, you know, I think you're right. It's a hard job, but I guess, you know, and this is why the next Fed chair is going to be in a very particularly hard position, because I think the next 5 years are going to be a real test for them.
Right. And even if you just focus on one of those variables that people think might be moving the neutral rate, the productivity question, you have people who argue that AI-driven productivity is going to bring down inflation. And so they will use that as a dovish argument. But of course, it's also going to increase the demand for capital. And so that's an argument that you have a higher neutral rate. And how these things are going to net out, it really feels like it's anybody's guess in the real world. And so what is one to do except look out the window, keep a close eye on the data, and be ready to react? Is that a reasonable conclusion, Allison?
Yeah, I think so. I mean, I think, yeah, I mean, you said we don't really, I think the other test is, when are these productivity gains going to come? Everyone is sort of, you know, it seems like everyone's behaving as if, you know, we'll get this sort of macro effects in the next year. But, you know, steam engine took 100 years to show up in productivity statistics. Still not even clear internet has shown up in productivity statistics. So, you know, how this sort of impacts the economy and when is a big test. And I think another thing we have to think about that I've been reflecting on a lot lately is, you know, the job of the Fed chair has changed a lot in the last decade. Effectively now, especially with this abundant reserves regime, effectively they're just one big fixed income manager. And so they have much more control over debt markets in a way they didn't before. So it's not only, you know, they probably influence the neutral rate in a way they haven't.
Okay, so the Fed is PIMCO. Do I have that right?
Effectively. They are. I mean, look at the size of their balance sheet. Like, they are effectively a really large fixed income manager right now.
All right. Let me take you all to a quick market check here. I have the yield on the 2-year Treasury note up on the screen, and I have it basically unchanged since this decision came out. You know, it's at 3.58, 3.59% right now. Same with the S&P 500, by the way. We've been on 7,000 watch like all day, all week, really. It's one of these psychological barriers that people love to watch in markets. Will we break through the 7,000 level? And right now, I'm not sure we're going to do it. We're hanging out around 6,973 on the S&P 500. I want to, as we head into the final 10 minutes of our discussion here, I want to talk a little bit about what we might hear from Chair Jerome Powell. I guess that's outgoing Chair Jerome Powell. This is, again, the first time we're going to hear from him since tensions boiled over with the White House. We had this news that the Justice Department is getting involved into this inquiry around the Fed's renovations of its headquarters, and Chair Jerome Powell put out a pithy but very sharply worded statement in which he said, "This isn't really about that. This is about the Fed's ability to set interest rates based on the data rather than the President of the United States' preference." So, Kathryn Anne, does Chair Jerome Powell say something more about that today? Should he say anything more about that today? Or has he had his mic drop moment and he should just let it go? What do you think?
I heard someone earlier refer to that today as the hostage video, given the lighting and the tone. I would be, I think on some level I'd be surprised if he brought it up. I think that, this is why he made a standalone video, was to address it separately. And I'm sure that reporters will ask about it, but I would be surprised if he brought it up, and that today is really about, communicating what the Fed decision is, where the dissent comes from, and what factors went into the discussion. I would be surprised if he brought it up. I'm sure someone else will bring it up, and I don't know what he'll say. I mean, it's uncharted territory. So if someone has a deep certainty about what will unfold over the press conference, it ain't me.
All right. Well, but Allison, this guy has done his media training. He knows how to deal with questions like that. If he doesn't want to go there, he'll say something along the lines of, "I've said everything I'm going to say on that topic." Is that the responsible response now? Or should he keep speaking up? I made the argument a few months ago that Powell is not going to save the Fed with silence, and I believe that then. I believe it now. Is this the time to keep being a punching bag, or should he stay proactive? He's gone on the offensive. Should he stay on the offensive?
I think actions matter more than words, and he just held steady. He didn't cut rates despite all the pressure. I think that says everything he needs to say. And he's very skilled, as you say, as not answering questions. And as Kathryn Anne points out, he's going to get asked, and he probably shouldn't say anything because, why poke the bear? Donald Trump, if you poke him, he punches back. And I don't think Jay Powell wants to be in the midst of this fight. He ultimately, did what was important, is that he held firm on rates because he felt that was what was important to do. And that was a much stronger statement than sort of, and I personally just want to live in a political world where we don't have politicians and policymakers in fights all the time, and just do the right thing. He did that. He should do the classy thing now and just be like, "I've said my piece. The marble in the new Fed is completely reasonable. Let's move on."
Yes, here. Let's please move on, and let's move on to a focus on what really matters here.
We need a lot of marble at the Fed. We need to create a certain atmosphere, and I stand by it.
Although is Trump really wanting to get involved in a marble and gold fight? I think he'd lose that one. Not that I've been at the White House, but I have seen photos. We're just speculating. It's the nature of the Fed and its decision making that for those of us on the outside, it's a lot of speculation. I kind of take Allison's point of, I think being classy is the right thing to do right now, not bringing it up, shunting it aside, making it about how this economic decision was made, because you wouldn't want to color a neutral, hold steady as like, and by the way, the president's wrong. And you don't want to conflate I'm going to stand up to the president for independence and I made a decision. So I'm sure he's going to want to keep those things separate, even though we all know that he was only able to do that because he is independent. And he doesn't really have the luxury of keeping those things separate, given that that's how he was able to do it. It's a rather bewitching place to be in. But yeah, he's going to write a great book one day and I'm going to buy it. Like, I'm dying to know his thought process on a day-to-day basis as all of this is happening, not just about these long run questions and the economy, but these kind of high stakes questions about what is the function of the Federal Reserve in our economy. And I would be really curious to hear his story one day, but I hope it doesn't come up in the next half hour.
Kathryn Anne giving a boost to Jay Powell's book deal chances here.
There's no way he won't get one. Come on.
For sure.
Okay. I mean, do you think of him as like a thinker? Like, it's not like he was ever like a scholar of monetary policy. And it seems like he just sort of, he's kind of, in some ways, his reputation has never been more redeemed by this political fight, because now he's this hero for Fed independence, but he had some serious policy errors along the way. I'd argue even beginning with the 2019 framework review, and then sort of letting inflation get out of hand, waiting a year to do anything about it, doing this, revitalizing a massive QE effort, so messing with the housing market. And I think we're seeing partially is sort of the fact that this is sort of a consensus guy, but maybe not like a great intellect around what monetary policy is, what it's supposed to do, and sort of its role in the economy.
Wow. Now, I think, again, we've gone down this road before, but I think like the bottom line on Jay Powell is that he got the problem under control without doing very much harm at all. Like, I hear you 1,000%. With the benefit of hindsight, it totally looks like, what were you guys doing in 2021 when headline inflation was clearly taking off and you were sitting on your hands until
Not just sitting
March
on your hands, keeping rates at zero, buying almost every mortgage-backed security on the market. I mean, he was still in like heavy accommodative mode.
But the
for a year.
True. This is all true. But the deal is now inflation is back around 3%. We never had a recession. They figured it out. I agree with you that the lingering problem is the housing market is still pretty messed up. All else equal, I think the sooner you could have gotten out of that uber accommodative mode, the less messed up the housing market would probably be today. I'm not sure. I mean, the ongoing purchases of MBS didn't look great in that context. I think a lot of the 3% mortgages that everybody got was because rates in general were on the floor. Spread compression was a little bit of that story, and that's where the MBS comes in. But I think he's a guy who made some mistakes, the same mistakes that everybody was making at the time, and he had like an awesome comeback.
Did he though? I mean, first of all, inflation is still 100 basis points above target, and he already started cutting. I mean, also, like, to some degree, what did he do that was so skilled in the last couple of years? I mean, yeah, he ended up like increasing rates and has cut them slightly, but that could be luck as much as it is skill.
Allison, what do you mean by not a thinker? Do you mean he's dumb?
No, but I wouldn't say he's like a big scholar on monetary policy either. He's a very smart guy and smart in a lot of ways, but does he have like a philosophy of monetary policy? Does he have a view on what it means in the modern market, what it means to sort of run a big balance sheet, and what that means monetary policy, what that means for the labor market? Has he ever been able to articulate why he puts more weight on labor market versus inflation? Like, these are things that I don't think like have ever really been articulated.
So you don't think Trump's good at appointing Fed chairs, is what I'm hearing?
I mean, he's only done one.
Allison, I'm giving you a hard time.
We have an N of one. And, you know, to be fair, I know someone who was on the board with him, and he took the view of, hey, I'm not a monetary policy scholar. I'm not Ben Bernanke. But you know what? You need.
I'm going to cut you off in 10 seconds. Finish that thought.
He is a good communicator and good at politics more than a thinker. He said that about himself. So, you know, and that's valid.
All right. And that is a wrap. I'm glad we took the lively argument right up to the bitter end. We are going to send you over to this very debatable Fed chair, Jerome Powell, right now for the presser. My name is Jonathan Levin. I'm a columnist with Bloomberg Opinion. Thank you to Allison Schrager. Thank you to Kathryn Anne Edwards. We will be back for Jobs Day next month. Take care.